Hi folks, Lee Gettess here with the Market Sense for the week of October 11th, 2016. As always, the charts we use come from the Trade Navigator software, and we're looking at bond market here, which seems to be breaking down a little bit, and this week in particular is a little troubling. We thought the worst resistance, and I'll put it that way, meaning it would drive them down the hardest, would would be right here in the 160, what is that, 65, and mid 165 range. Let's call it 65.14 right in here. Didn't quite get there, and it is now broken down, but we've got support just below the market here at 63.14 that could hold them also, and could drive them all the way back up to 67.08 here. What we have in this market is an unusual week. We have economic data, and of course, you never know when there'll be a surprise to anything. But the big deal is Wednesday afternoon, they released the minutes of the Fed meeting, the last Fed meeting, and they were so divided as to whether to raise interest rates or not. There'll be a lot of focus on what was said in that meeting. So I think that that might be the big driving force for the week, despite any other economic deals. Of course, you never know what will happen overseas. And I think I pointed this out before. Going all the way back to when they made the high here, the momentum indicator has remained somewhat negative. Not somewhat. That's pretty negative. So, there certainly is a risk of a tremendous breakdown here, possibly even back down to the 159 area. But it looks like they're trying to get something done here which is nice. We like to see movement. Stocks, well, they could be showing movement also, but they've been even quieter than bonds. Opening this week, we thought there was a good chance there would be resistance in the 2168 area, which they have not quite been to. And they sort of broke down. Certainly on the daily chart, looked like they broke down. They broke down out of this inside bar, but they do seem to be holding in the support area here, which is roughly 2132. That's the lower red line here, 2132 down to the mid-Keltner channel here. They seem to be holding that, which could mean this is a false break, which, if they try the lower end and fail, then the next thing is the upper end, and they could break it back out to the upside. But I'm getting way ahead of myself. What they did is actually broke down Tuesday and then recovered this level. And here again, the Fed meeting minutes could drive them tremendously. Despite anything else that's happening economically, I still think central banks rule the financial markets right now. And I should point out that since this sideways pattern, this little kind of false break here that they've bumped back up for, the momentum indicator, just as in bonds, is remaining pretty negative. So that suggests that we could possibly have an October surprise. We've had some nasty downdrafts in October. We could have one again. I will say, though, it won't take a whole lot of turn back up, take out these highs, well, heck, they could take out the all-time highs here, and that would turn the indicator positive also. But right now, they broke down. Maybe it's false because they're holding this 2132 area, but keep an eye on it. Another move down, and I'm almost sure they'll go to the 2100 area, and I'm not sure that'll hold either. So that's what we've got for you today. I hope you can find something profitable.